Howdy friends, thanks for joining us for this month's update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. Well, there is reason to be optimistic about this upcoming fall, and not just because of the return of football season. Cattle markets are giving us some reason to be positive, even though there's still headwinds and concerns about increasing costs and ongoing drought. Today we're going to talk about the August video sales and what that has to say about how the fall calf run could shape up. We're going to be looking at the current cattle cycle, where we're at with that, the effects drought is continuing to have on feed yard placements, beef demand, and the outlook for cattle prices in 2023. First off though, I want to thank the sponsors of this month's report. Ag Risk Advisors continues to support us in this endeavor. Now is the time to start thinking about pasture, rangeland, and forage insurance. There's still plenty of time before the deadline, but if you want to see some examples on how PRF could work for you, visit them online at prfadvisors.com. Well, we had been seeing a steady push higher out of the cattle futures this summer. Feeder cattle really making hay out of corn prices leveling out, but now projections for corn yields are coming in lower than anticipated, so feeder cattle prices have moved lower. Live cattle were staying steady for much of the summer, but feed yard currentness did improve and packers had to get more active in the cash market. A little pullback lately with a couple of shortened kill weeks at the end of August, but front-end fed cattle supplies are tight, putting feedlots in a better position heading into fall. It certainly helps cow-calf producers when feed yards are more profitable. We've seen stronger video sale prices, and if you look at those deferred cattle futures, there's quite a premium between right now and the spring. Back to the video sales though, calf prices $3 to $5 higher than what we saw in July, and the discount on heifers starting to narrow some. Upper 4-weight steers selling from $230 to $260 in most of the video sales. 5 to 5.5 weights from $220 to $230 for the most part. Upper 5 weights $212 to $223. 6 to 6.5 weight steers primarily $205 to $215, some up to $220, and your heavier 6 weights $2 to $210. The yearling market staying pretty strong on the video as well. 8-weight steers selling from $180 to $193, 9 weights $170 up to $188, your big 1,000-pound steers $165 to $174, 8-weight heifers $172 to $185, and the 9 weights $164 to $177. So what factors should we be watching for during the fall calf run? Well, the price decline seen in the fall is expected to be smaller this year. That's a function of there just being less cattle to sell. We've culled and sold quite a few cows here over the last 2 years, so a smaller supply of calves to sell should be supportive of prices. We're not expecting as many challenges in getting trucks as we saw last year, but freight is going to be an issue both in the cost of getting trucks to get cattle out, but also to bring hay in. Feed is going to be a significant determining factor to the calf market this year. Once we get past corn harvest, hopefully that price will settle or even come down a little bit. That would help to keep costs of gain in check for feed yards. And I mentioned those deferred live cattle futures. They're going to have a lot to say about profitability and feed yards' appetite to continue to purchase calves. Overall though, calf checks this year will be larger than last year just because of how much stronger the price is. However, many ranchers are producing their most expensive calf crop ever this year, so profitability is not going to increase to the same degree as gross revenue. Now, in this month's Cattle on Feed report, we were hoping the figures would reflect the tightening fed cattle supplies that we continue to see, which we did see on the front end or harvest ready supplies. Those are tightening. We talked about improved currentness, but the drought in the south really caused a lot of cattle to come off pastures early, and we saw that placement figure higher once again. So the industry continues to pull cattle forward, but as we've mentioned, there's just not the supply of feeders coming in to replace those being marketed. So that will keep pushing leverage away from packers over to feed yards and really to cow-calf producers. Since the cattle cycle peak in 2019, we've liquidated 1.5 million head of beef cows, and CattleFax says we'll liquidate another 1.2 million before the cycle lows somewhere around 2024. Now that beef cattle herd cycle low will be somewhere around 29 million head, and that's at or below the previous cycle low seen in 2014. And then you look at the number of heifers that we've liquidated that have been pushed out of replacement channels and into feeding channels, and the rebuilding process is going to take longer in this cattle cycle, so we could be looking 3 to 4 years of higher prices, the next price cycle low occurring somewhere around 2030. So the supply side of the equation is supported to prices, but what about demand? Given the inflationary pressure and concerns about recession, a lot of people are saying we could see producers purchase less beef. but the analysts are saying they expect retail prices to hold pretty steady over the next couple of years. We've seen some downshifting at the meat case from your higher end cuts to middle meats and ground beef, but overall beef demand is expected to stay historically strong at least over the next year. And wrapping up here, I do want to talk about next year some more with CattleFax's 2023 price projections. With the tighter fed cattle supplies and 5 straight years of smaller calf crops, prices will move higher. Fed steers are projected to average 8% above this year at $1.54. Yearling prices even stronger, ranging $170 to $205, with the average up 15% at $190. And 5.5 weight steer calves, they're projected to average $2 this year. CattleFax says they'll range $205 to $265 next year, with an average up 17% at $235. Those higher prices make it difficult not to be optimistic about this cattle business. Like we say, prices will be moving higher. It's the other side of the ledger, the costs, that are the concern. But if we can get some of these inflation issues under control, get feed costs to come down, hopefully fuel costs as well, and if the moisture conditions will improve, you'll be hard-pressed not to find a rancher without an ear-to-ear smile. Thanks so much for joining us for this month's report. Remember that PRF deadline is coming up on December 1st, so reach out with questions now to Ag Risk Advisors at prfadvisors.com. Thanks so much for joining us. We'll catch you next month.